we're expecting a solid start to the session today after positive leads from Wall Street. Let's get more on what to expect. James Gerrish from Shaw and Partners joins us live. James, pleasure to have you on the show. Good morning to you. What are you watching today? Because we are looking like we're going to get a positive start. This all, I imagine, is coming from the gains we saw on Wall Street. What are you watching?
Yeah, morning to you, Ingrid. As you made mention of a positive start, futures are up 48 points this morning, so we'll build on some recent gains that we've had on the ASX. Obviously, technology in focus. They were the strongest sector overnight, but you look at what's happened on the ASX over the last couple of days. It's really been those technology stocks that have been shooting the lights out. They were up 3% yesterday as a sector, the IT sector here in Australia. So I'd expect that theme to continue. I think, from an index point of view, I think we need now to be conscious of the fact that the market's trading up towards that 6,200 handle. That's obviously been a pretty decent cap on the market for the last 3 months or so. So this 5,700, 6,200 range has been playing out. For now, we've got to sort of respect that range. But, with some luck, we'll bust out through that range. And we probably need the banks to support that if we are to go through that 6,200 level, Ingrid.
Well, speaking of the banks, CBA's got its AGM kicking off in about 40 minutes' time. Are you expecting to hear any news? I mean, obviously we'll get a big release to the ASX, with just a bit of an update from the company. What will you be watching for?
Yeah, it was actually, I think one of the interesting things that came out on the CBA yesterday was data around loan deferrals. So they've had some really, a lot better news rhetoric coming through around the quantum of loan deferrals, particularly in their SME business. So obviously the business lending side is where the majority of bad debts come from. The fact they're now down to sort of 8% of loans or thereabouts deferred in that area, I think is a real positive, and I think is a broader positive for the banking space. So obviously we've got a lot of government stimulus playing out, but the fact that people are back paying their mortgages after their 6-month holiday rolled off is obviously a positive for CBA yesterday, and I think some more commentary around that is going to be key. I think at the AGM today as well, banks are very much barometers of broader economic strength and weakness. So their commentary about what they're seeing from an economic standpoint, I think is going to be interesting from my perspective, Ingrid.
Yeah, okay, so watch this space. And I mean, looking forward, I guess, at other things we're watching on the market today, China suspending purchase of Australian coal. That's the rumour, that's what's going around the market. More trade wars, I guess. This could impact a lot of the coal players here at home, obviously. Yesterday we saw a bit of a fall in some of the key coal players. Will you be watching for more falls here, and how significant will this be if it's confirmed?
Yeah, I was just discussing that with Peter O'Connor this morning, and obviously we've seen a lot of news, rumours, innuendo about this ban being in place. Bloomberg's full of headlines around it, but we haven't seen confirmation around it from the Chinese. So obviously where there's smoke, there's probably fire. It's obviously a negative for coal stocks. Would I go out and buy coal stocks with this uncertainty overhanging them in the market today? Probably not. I think they probably trade lower on the back of this. There's more uncertainty around, obviously the future demand coming out of China. So to me, I think we've spoken coal stocks a number of times on the show. Obviously, they're cheap. They're cheap for a reason. There's a lot of complexity around them. There's a lot of headwinds around the coal space at the moment, and this is just another one. So I find the sector all too hard for mine, Ingrid.
Are you seeing much opportunity at the moment, James? When you look at the broader market and where we are right now in the recovery story, where are you seeing the best opportunities?
Yeah, that's an interesting question. So I think you've got to go a little bit against the grain and sort of have a bigger picture view. So resources have been really interesting. They obviously had a really strong run over the last 6 months or so. They've cooled in recent times. So I think that's probably a trade that we've taken some off the table across our resource holdings. Technology had a pullback sort of a month ago. In the Nasdaq, it declined around 14-15% from its highs to a reasonable buying opportunity into a short-term low. I think technology stocks have still got really strong momentum in there. I was interested to see Bravura Solutions yesterday come out with a pretty strong announcement. They are up 9%. So that's a technology stock that's came out with an announcement back at their results that probably was a little bit downbeat around growth expectations. The market sold it off. They've had some positive updates yesterday. The market's bid it up. So I think the buy now, pay later space, I don't want to keep harping on about it, but it's a strong seasonal period for that area of the market. So I think that's a place to be in the short term over the next 3 months, say. And I think the banks are improving. So that data out of CBA yesterday was a real positive for mine. So yeah, of course, there's always opportunities in this market, Ingrid.
Well, it's a pleasure to speak, James. We will chat with you again soon. Thanks for joining us on Ausbiz.
Have a good one.